So if you want to understand the economy, the markets, and the state of global affairs, you have to think of it a lot like a birthday party. Essentially, when you plan a birthday party, you decide who you want to invite and who you don't want to invite. And then sometimes you have these crazy relatives, in this situation we'll call them MAGA, that you're related to, and you kind of got to go along with what they say sometimes. That's how relatives are. And so these crazy relatives, they decided to invite Donald Trump to the party. And you're like, okay, great. What do we do with this guy? How do we make it sure that he doesn't destroy everything? And so there's that. That's where we are in the markets. Trump is coming to the party. And these are the headlines today. Bank of America bets on a potential Fed rate hike after jobs report. Top Wall Street brokers revise forecasts. What's going on is, before many people on Wall Street were saying, okay, they're going to cut this year, maybe a couple cuts, but they've keep revising things. And now the revisions, and this is the first time I've heard anyone from Wall Street say it. Now, we've talked about before that they could potentially hike, but now Bank of America is actually saying it. Again, this is the first time I've heard this from Wall Street. Bank of America says, we think the cutting cycle is over. So they think no more cuts. Our base case has the Fed on an extended hold, but we think the risks for the next move are skewed toward a hike. Now, there is some disagreement on Wall Street. This happens, and no one knows for sure what the future is going to be because Trump is very unpredictable. And especially with, even though we lived through 2016, we saw kind of the crazy crap he pulled and the incompetent people he brought into the cabinet, et cetera, on his team. It's even worse this time around. More craziness, more unqualified, more incompetent people. So it's hard to say what's going to happen. Other banks on Wall Street are saying we still think there might be one cut this year, 2025, but we're pushing back. Maybe it's going to happen in June or something like that. But that's 6 months from now, so we'll see. Depends what Trump's up to. We're getting these wild headlines these days. Like, for example, the economy keeps beating expectations. Can Trump keep it going? And there's a lot of opinion discussion on. Will things get much, much worse under Trump, or could he at least keep it, the same and extend what Biden's been up to? I'm kind of in the more worst camp, but it depends who you ask. The jobs numbers were actually surprising this time around. They were higher than expected. We just looked at the estimates yesterday. They were expecting 155,000 jobs. It came in at 256, so stronger. So that would suggest chances are they should hold rates. Don't need the cut. Unemployment is at 4.1. Now, Wall Street, if you guys knew this stuff, they always want rate cuts. Basically, they want free money to flow around to everyone so you can borrow and borrow and leverage and borrow and borrow and leverage, right? So you want to be able to borrow that money to theoretically hire people, borrow that money to theoretically do mergers, these kind of things. And essentially, they think it is all about growth, and you're going to get that trickle down to you. The problem is, though, is that if looks like there is job growth, then it sort of weakens that thesis. I will say this though, the jobs numbers sometimes get revised, and I'll say often these days. And this particular number might be a little bit stronger than what people thought because it includes a lot of seasonal workers. So, if that is indeed the case, and we get confirmation of that, then maybe the job market isn't so great. It's hard to say, guys. That's why the Fed shouldn't move too quickly, and frankly, they could just hold. Now, at the moment, this is kind of an interesting thing. And if you're curious what the jobs are, it was retail, healthcare. We've seen this before, the kind of stuff. If you are interested, though, in this, is thinking about Trump historically coming into office and unemployment rate, they had this really interesting chart here, and this was the headline: is Donald Trump inheriting the best economy in history? So that kind of stuff is debatable, right? It depends who you ask. And there's been a big divide in the economy. If you're towards the top, you think everything's going great. My assets are going up. I'm doing absolutely fantastic. If you're towards the bottom, you don't have a lot of assets or any, and you just feel like you're getting farther and farther behind. And the job cuts are affecting people differently. What's been going on in professional circles, like let's say the Wall Street circles, for example, they're starting to experience the cuts and stuff like that. And so when they start panicking, then it trickles down to mass panic. And then people towards the bottom of the spectrum are like, well, I mean, we've seen this all along on the ground, right? What are you talking about? But anyway, I want to show you guys some other things. And it's, again, like I said, it's debatable whether or not Trump's inheriting good economies, right? So there's that. But if you want to just look at a number like unemployment, this is actually a really interesting chart, starting from Nixon going to the second Trump around. Sounds like a song. Trump around, Trump up to Trump again down, right? So Trump is inheriting a 4.1 unemployment rate. Compared to Biden, he inherited a 6.4%. I was looking at this. The highest one would have been Obama when he came into office after the great financial crisis after Bush left. But we also had Carter and Reagan. I mean, unemployment used to be, 7% back then. I think it was even double digits or at some points. I could be wrong on that. I'd have to check the charts, but I know interest rates were very, very high, and it was pretty crazy back in the 70s. And you guys are probably remember this stuff for the old enough to remember this. But yeah, the Trump, I guess the only one that would be lower than Trump, let's look at the chart, would be Nixon back in 69 when unemployment was 3.4. But do be aware that sometimes these numbers are not exactly precise depending on how you're counting unemployment. If someone's decided to, completely give up looking for a job, they don't necessarily count that. So do be aware of that kind of stuff. The market though right now is a bit tricky because the valuations of companies of the U.S. are just frankly frothy levels, tulip levels, crypto levels, or digital crypto tulip levels. And it's basically based on we're paying too much money for how much companies are actually earning. And the markets are always betting on what's the forward, future projections of what stuff's going to be. We're at a lose-lose situation, right? No matter what numbers come in, it doesn't really look good. And then the other issue is there's more pressure. Actually, Biden people, they put in more sanctions on Russia, and that'll be more pressure on oil prices, right? So if you cut supplies, that would probably bring up the price of that. So there's that, and that's always been an interesting debate in Europe, right? You're fighting Russia, but yet we're still buying energy from them. So, that's kind of our world. We have a lot of these conflicted relationships, as I'm sure you guys know. It's kind of like being related to MAGA, kind of like that. And you have to laugh at this stuff. I mean, I understand that there's a lot of seriousness with a lot of stuff we talk about in the news every day, and I'm just reminding where I do know. These are some other headlines. Fresh tariffs could see interest rates stay higher for even longer. IMF warns, so we already kind of know that. And they actually point out something interesting, and I'll read it here. This is from the IMF. They were saying here, uncertainty about the incoming administration's trade policies is adding to worldwide economic headwinds, and his quote is actually expressed globally through higher long-term rates. They also say here that's happening even as short-term rates have gone down, a very unusual combination. I was actually looking at this for myself. These are the treasury yields at the moment. What I think is happening is probably people are piling into like, hey, you know what? I'll get that sweet, what is it? 4.3%, 2% from a 3-month. And then I'm expecting the 10-year to go up. And then when that 10-year hits 5%, I'm going to buy some of that. And that's something that if you want some risk-free, ways to grow your money, 10-year at 5% is not bad at all. Could it go higher? Sure. I mean, if we're talking, rate hikes, is certainly a possibility, but we will see. This is where the instability is, because essentially you're just trying to figure out where to deploy money. There's another headline here. Trump's tariff plans could devolve into hostile trading blocks. That's something I mentioned with guys before on the channel. It becomes too difficult to trade with the USA. Just trade with other people. There's lots of other countries out there. Canada was even, I just saw it was just yesterday, they were talking about fighting back if there is indeed a trade war with the USA. And I'm telling you guys, if Trump does this whole tariff thing, it's not good. I mean, just the way that it's looking, everything, you're looking at a very similar situation to the 1920s. Remember the big crash in the 29, and then you had the Great Depression. Now, are we known a Great Depression? We have a lot of safety measures in place that we didn't have back then in terms of our system. But Trump's crazy enough to be like, hey, I don't think we need the FDIC, or hey, we don't need, Social Security. Like these kind of people, they don't have any really, how can I say, experience being a regular person. They were born really wealthy. They're essentially spoiled brats, talking about Trump and his people. And spoiled brats, if you ever had been around one, they're the kind of people that are like, they have to get it their way, and if they don't, they just cry a lot and act like it's an unfair system, even though they're born rich. They're spoiled brats. That's essentially what it is. So there's that. And so there'll be a lot of people who'll be like, you know what, I'm just not going to trade with you. I'm going to go trade with someone else. This was an interesting one. This is one economist, or actually I should say former chief economist at the IMF. He's saying here, quote, my biggest worry is that we could see the world devolving into mutually hostile trading blocks. Trade wars and political uncertainty are not recipes for growth. There could be a global downturn. But it's not just the trade thing. It's just sort of where things are going. Now, on top of that, there's a lot of animosity these days towards people at the top. Just because you see it at your workplace, you see on the news, etc. So, for example, this is the headline today: Apple CEO Tim Cook 2024 pay rises 18% to 74.6 million. You know, it's a lot of money. I don't explain it to you. And for regular people, be it Apple employees or whatever, you're like, huh? So I got my whatever 4% this year or 5%. Depending on what you got. And this dude's getting like 18%. What the heck? Now, to be fair to Tim Cook, it's not just pay. The way they structure these things, you got your pay. I think his base is like $3 million a year. He's got a bunch of incentives and stocks, options, etc. And a lot of this may include, how can I say? The market's actually going up quite a bit. So depending on how you calculate his pay package, right, it includes the rate that Apple stock has gone up or whatever. But it is quite a bit of money compared to the regular people. And it's, to put this into perspective, though, remember Elon Musk is fighting for his $56 billion pay package, which is absolutely ludicrous when you compare it to, say, something like Tim Cook's. Now, the Musk thing, though, I think that's over a period of time, maybe in 10 years, but I guess that would still be 10 or 5 billion a year or whatever. So it's still pretty ludicrous. It's all ludicrous numbers. And then you have these kind of people, and this would be in JP Morgan's case, that say, hey guys, you got to come back to the office. And when companies do this, and a lot of them have been, I think it's because they want to fire people. Essentially, they need an excuse for you to either quit or fire you or whatever. People at JP Morgan, 5 days a week work, we're actually really against it. Of course, so employees, because you guys know this, you make your life decisions based on, okay, I'm only work 3 days in the office, 2 days at home, and you've kind of already moved, and you've already scheduled your life differently. This is what people have to say, and you actually have to read this. It's actually interesting. So they posted like a memo or something, and then in their work servers, people were writing stuff. This is from the workers at JP Morgan. Many were negative. Yes, of course they were. Many were negative and expressed disappointment in the new mandate, which replaces hybrid work schedule. One person remarked that someone who is driven around by a chauffeur must have made the office return decision, right? So again, and these people at JP Morgan, they're going to have money, but their bosses have like even more money. And they're saying, who made this? Were you driven around your, chauffeur when you made this decision? So another person said, and another said they were going into the office just to go on video calls. That's pretty funny, actually. Yeah, that is actually pretty funny. You go to the office and you just spend all day on video calls with other people. That is pretty funny. One comment, well, not funny to them, but you get the point. One comment wondered whether employees should unionize, while one person lamented that they would spend more time in traffic. Yeah, and you guys know this. For anyone who works from home, it could be an hour each way to traffic. That's an extra 2 hours a day that you just feel like you're doing nothing and wasting energy, money, gas, etc. Then you got to, spend money on food at work, all these things. The unionization thing is an interesting one. So unions got really weakened during the Reagan years and been downward ever since. People don't really have pensions anymore, worker protections. And then people vote for the Trumps and the Musks, who hate unions, hate workers, and don't want to pay people anything. They want to, keep workers dirt cheap as possible. And so it'd be quite interesting if you start getting pushed from the top of like JP Morgan pushing for unions, how it would change the workforce entirely. But we'll see, because unions in the past tend to be associated with sort of skilled trades or not office workers per se. But I want to make this clear. But we do have unions in the office worker space, be it like government, city unions, these kind of things. And you guys can let me know if there's other like predominantly office worker kind of work. Like, does anyone in tech have union? I'm just talking out loud, so you guys can let me know on that. But that'd be interesting though, if like a JP Morgan went that route. So like a teachers union would be kind of similar to, not exactly office, but I was just thinking not necessarily trade though. Also says here, the ability to post comments was turned off after hundreds of employees' responses. So they got so many negative stuff, they just turned it off. The company regularly turns comments off if there's a high volume, so the staff who moderate comments can better handle them, a person familiar with the system said. So they're getting flooded with comments. And then, so that ones are kind of funny to read, oh, did your chauffeur make that decision? Or you're driving around in your car while your chauffeur made it and you made that decision. But there's also, just more practically speaking, someone said that they have a child with special needs, so that pose a problem for them, right? You guys can see this. And I always, when we go through news and stuff, I just always try to remember when we read about stuff that's going on, around the world, various companies. Let's understand that everyone's are human beings. We're all real people, and it makes you help you understand stuff better when you see it through this way. Another person said it's kind of funny. They said another employee wrote that the mandate would be bullish for Rolex prices and homeowners within 5 miles. And then another person said, "This ain't it." More companies have been firing. I've been noticing that. This list, it was like Bridgewater, which is a hedge fund, Ally Bank was in there, Microsoft was in there, etc. And as I said before, there's been a divide between those at the bottom and those at the top. But when people at the top start feeling it, you'll start to see it in the markets more as well as word gets around. And everything depends on your neck of the woods and which industry you're in. If you feel like people are hiring or not, if there's opportunity or not. For example, like Wayfair, I guess they're leaving Germany, cutting 730 jobs. You got Elon Musk, and I just did in a prior video. You can find that video, but he's got his agents. In this particular article, they use the word minions. Agents, minions, staff, everyone, I don't want to say it. I don't know if there's any other words for that, but they're sending them out to various federal agencies trying to figure out where to cut. As economy downturns, things start to get ugly and the claws come out. So, for example, Zuckerberg gave a podcast with Joe Rogan. If you want to watch that thing, you can. I just read through the highlights a bit. But basically, he was saying that Apple's no good anymore and basically taking pot shots at Tim Cook, etc. I'll read a little bit. It says here, Apple has this is from Mark Zuckerberg regarding Apple. Apple has used the iPhone to put in place a lot of rules that I think feel arbitrary. I feel like they haven't really invented anything great in a while. It's like Steve Jobs invented the iPhone, and now it's just kind of sitting on its 20 years later. Actually, I think year over year, I'm not even sure they're selling more iPhones at this point. I think that sales might actually be declining. So that's coming from Zuckerberg, just his opinion. And then he goes on and just talk about Apple. So not everything he says is untrue, right? I actually don't disagree. Apple's not the same company after Steve Jobs left. I think everyone knows that. I will say this about Apple. Their new M chips are absolutely fantastic. I've said that every single time that I talk about this particular subject. But yes, their iPhones, I don't know. They get better every year, but it's not like revolutionary. I'm still waiting for my crazy flippy phone. I don't think it's ever going to come. And I want one that's not going to break. And it just feels like these companies, Apple or whatever, are just trying to nickel dime you by cutting, things that you really could use, like, for example, the replaceable battery. And my wife always tells a funny story where, she's sitting in the cafe and you hear these young people like, wow, it would be a great innovation if phone companies could make it so that you could replace the battery, and that would be awesome. And anyone who talks like that, it kind of shows their age. So for those of you who are old enough, you probably get the joke of why that's funny. Or be like a young person like, wow, it would be great if they put a headphone jack into the iPhone. Man, that would be absolutely fantastic. Again, if you're old enough, you understand these jokes. But Zuckerberg was also saying too that Apple has a tendency to make it so that their products only work within their ecosystem. But I think all of these things put together, be it cutting employees, be it trying to nickel and dime people with various, business practices, just kind of shows where we are in the markets, right? The push for profits is always there, of course. Wall Street, wants that. That's to keep your stock going up. We have stocks, and companies like Tesla that are completely disconnected from reality. And then you do have the reality of, say, for example, and I mention this one all the time, you just got to bring it up, the market in China, which is a very, very important market to many companies. But you can talk about any number of countries. Like Canada doesn't look so strong these days. And you guys know this. I think Trudeau just stepped down. You got to find someone else. The UK, the economy doesn't look so great. I can't speak to Australia because I know we have a lot of Australians that watch this. Please chime in. I know France is having troubles. I know Germany's having troubles. I can tell you here in Korea, we're having troubles. We're trying to arrest our president. That's been kind of slowed down. What can I say? I mean, I laugh at that one. It's like, just arrest the guy. That's my opinion. Just arrest the guy. If anyone gets in the way, arrest them too. Push them out of the way, whatever. Just go arrest the guy. But I understand. It's a long discussion. You can find my other videos on the Korea situation. Just Google Korea on my channel. You'll find that. But regarding the China thing, though, they're in a situation where they're going to have to do a bunch of deficit spending. That's been on the table for a while, and it's hard to say what's going on with their numbers. Are they telling the truth about their numbers or not? Who knows? We just talked about yesterday where there was someone who was saying they could be, lying about their GDP growth. It could be, 2% a year. They're saying it's 5 or whatever. So who knows? But you'll get some leaks every now and then. Lately they've been talking about we need to, more stimulus packages. We need to raise the debt limit, this kind of stuff. It sounds just like the USA, essentially where China's going, where, the government's going to keep borrowing and do subsidize, will create kind of quote fake growth in a way. So for example, you'll see this chart coming from China where, hey, more people are buying cars, but it's because it's subsidized, right? So it doesn't necessarily, how can I say, indicate exactly how the real economy is doing. And then in China, they're having a really hard time getting people to spend because people are just really cautious about the future, right? And so, or that's the right word to say, they're not confident about the future. It's another way to put it. And you could make the same case here in Korea. It's like the housing market. It's every day on the news is like, we haven't had a crash yet, but no one's really buying or selling. So it's just things aren't really moving so much. And then we also have issues of population, worries of population growth, or like not enough children, basically. The same with China as well. Japan's had the same problem for decades, actually. And that's sort of where we're at. And so if you're looking for opportunities in the market, my particular opinion on this stuff, pay off your debts. I think can't go wrong with that. Do I expect crazy gains in the U.S. market? Probably not. I mean, the last couple of years, it's been pretty good. Like, was it 24% this year, I think, in the S&P? I think it's this year. And so, like, do you expect that every year? I mean, it's historically, it's like, no, it's not going to do that. I mean, historically, maybe 7 to 10%, something like that, maybe, or sometimes go big down years. And then you got Trump coming in the office, and it just feels like we're setting up for a major crash. If you just ask me logically, at least in the USA, around the world, usually if you can time the bottom, if you're lucky, right? So when things look really, really bad in, say, Korea or China or the UK, man, be buying up that equity, and you wish you did, but it's hard to say. No one knows for sure, and you won't know till 10 years from now. And it could be down for a long time. The problem with our whole system that we're at is just that just a lot of printing. A lot of the stuff, again, is based on debt, and then you have countries that are interconnected with each other. So if it turns out that the U.S. economy is extremely weak and no one's buying anything, and the companies end up firing a lot of people or outsourcing a lot of jobs, and it just creates these massive imbalances in the economy that don't make sense, to be perfectly frank. And for me personally, like with the whole Trump situation, I think for any president coming in at this time, it's going to be tough for the economy. And then Trump it just makes it worse, adds more fuel to the fire of not so comfortable times going forward with all the incompetent picks, and then the risk of major tariffs. So, and he could say anything wild any number of days, and the markets will freak out. So anyway, that's my thoughts on everything. Just wanted to lay it out what's going on in the news. I always appreciate your time, and thank you again for watching. I'll catch you in the next video.